So let's pick up on that warning that you gave on October 10th, and you've confirmed that guidance from October 10th today. You're talking about expecting adjusted EBITA, the margin, to improve around 10 to 20 basis points. And you say it's given the overall significant headwinds and the performance trajectory of the connected care businesses, which you are addressing. Can you tell us a little bit more about that? What exactly are you doing in terms of actions at connected care to fix the shortfall?
Yeah, sure. Well, let's first position the overall business. We consider the third quarter to be mixed results because on the one hand we had this fantastic 6% revenue growth, which is across all businesses and across all geographies. So clearly the innovations have tractions across the world. Customers want to deal with us. Profit expansion happened in diagnosis and treatment and in personal health. And we had issues in our connected care business where, among others, the headwinds of trade tariffs hit the profitability next to some one-offs and a mix that was a little bit less rich. I think it is important to realize that these tariffs are not easy to mitigate. You have to go deep into your supply chain to find out exactly which components, which materials are subjected to the tariffs between the US and China. And in our business, it has taken more time to fully get to the bottom of it and to instigate these corrective actions. So it has set us back a bit in the quarter, but we remain confident that in the coming quarters we can resume our upward path, as we in fact have been doing for the last 3 years with a very significant improvement ride.
Frans, good morning to you. Our top story this morning is that phase one is nearly done. How quickly, you guided in terms of your adjusted EBITDA margin, you guided us down to 10 to 20 basis points of an increase versus 100 basis points. If phase one is done and these next set of tariffs do not come into play, how quickly would you expect to re-guide the market on margin?
Well, we don't know exactly what is in phase one. So it could be very good news, or it may not affect the portion of duties that is hitting us. So let me unpack that a little bit more. We expect that the net impact of duties this year, after the mitigation we just talked about, amounts to some 70 million euro. So that is duties that we pay between the US and China in both directions. If the goods and the materials that are part of that phase one deal are the stuff that we use, then that's great news. Then it means that those duties would come down. It could equally be that it's more agricultural focused and therefore it will not benefit us. So I am as anxious as everybody to understand what is in that phase one deal. And we hope very much that it's going to be good news. In the meantime, we have no other choice but to continue to take corrective measures.
Yes, and that brings me back to my first question, Frans. I understand that it is challenging to get visibility on the business, but in terms of the steps, the concrete steps that you're taking in connected care then to mitigate the impacts that we've talked about so far, what steps are you taking?
We are focused on selling the products that have the best margins. We are taking the corrective actions on the supply chain so that we can avoid the duties. We were, of course, already working on it, but we expect in the fourth quarter to see further evidence of that. We are also focused on cost management. Altogether, I'm confident that the suite of measures that we have in the pipeline are going to be sufficient to see us improve margins again in the fourth quarter, and of course then to resume a good path for next year.
Yeah, I mean, there are so many difficult known unknowns to deal with. Frans, can you tell me what's going on in China? The data that Nair and I break, the slowest growth in 30 years, huge headline. You still had double-digit growth in China at the end of the second quarter, and that was taken quite well by the market. In terms of the initiatives taken by the Chinese, how is that playing out for your business? Give us a little bit of an insight of what really is going on in the China side.
The repositioning of Philips to be a health technology company is really working out in our favor. Across the world, but also in particular in China, we see aging populations that require more healthcare services. People struggle with lifestyle diseases such as diabetes, cancer, cardiovascular disease, and the capacity in China to deal with that population health issues is just not sufficient. So we have seen a strong expansion of the healthcare segment, and Philips is one of the market leaders in China. We have a very good brand reputation, and we have been growing double-digit for years now. And frankly speaking, I do not immediately see that an economic growth difference between, let's say, a 6% or a 7% in China makes any difference on that growth outlook. So I'm confident that we are on the right path in China. We just got our minimally invasive operating room lab, the Azurion, approved by the Chinese authorities, the CFDA. So we are actually expecting good traction from that product category as well.
Frans, we've talked about the possibility for a rebound in the business if phase one of the deal between the US and China goes through. If the trade war gets worse, Frans, two-pronged question: how protected will consumers be from your business in terms of price increases, and how protected will return of capital to shareholders be if the trade war gets worse and further impacts your business?
A scenario whereby the trade wars actually go in the wrong direction, I think, may also happen. We also need to worry about what happens between Europe and the United States in that context. In the end, trade wars always end up being paid by the consumer. And that is very unfortunate. I don't think there are any winners in a trade war, and certainly not the consumer. Now, we try very hard to avoid the impact of duties by either shifting manufacturing location or by changing the composition of the components of our products. All of that takes time. We try to avoid that our customers and the hospitals are affected by price increases. But of course, if this continues, then there may not be any other way than to pass it on.